Yes, sir.
So did you solve the homework today?
Yeah, I solved.
But you have not uploaded it?
Yeah, sir.
You have
So what is,
uploaded it?
sir? No, no, no. Because I have to upload my one question left now.
So is there any problem in any of the question
Yes,
that I
sir. The problem is there. What about this fourth question and fifth question?
fourth and fifth? Okay, tell me what is the problem here?
In fourth one, like however I journal entry, they will not ask for journal entry. They are asking for a balance sheet. They will not asking for journal entries.
Okay, we will discuss the
In
balance sheet part. But yes, you can solve the journal, pass the journal entry for these questions. I have told you already that we have to do only journal entry in these questions. So whatever it is asking, we have to pass journal entry.
yeah, journal entry I will pass, but they will not ask for journal entry. They is not asking.
But no issue.
Okay, and this fifth question, I don't know, they are asking for list any three alternative for allocating these shares.
27 lakh. So a company invited application for 75,000 equity shares. Okay, all other questions?
Yeah, all other question I have done. Sixth question I have done. Seventh also I have done. Eighth one I am doing, and ninth one. This ninth one. In ninth one, so they have given 3%, like 3% free the premium per share. So I have to include that thing also.
Question number 9.
Yeah.
Stone Company Limited having an authorized capital of 10 lakh divided into share of rupees 10 each issued 50,000 shares at a premium of 3 per share means share price is 10 and it is issued at a premium of 3 rupees means 13 rupees. Okay, 3 per share on application, 3 per share on allotment including premium 5 per share on first call 3 per share and the balance as and when required. So it means balance remaining is 2 rupees because total 13 rupees. So 3 plus 5 plus 3, 11. So remaining is 2 rupees. Yes. So you have to do just like we have discussed these type of question. Yes.
Yes, sir.
So is there any other doubt?
No, sir.
So question number 5 and 6. Okay.
No, no.
At
Sixth I have done. Sixth I have done.
4 and 5 then.
Yeah.
Okay. So presentation in balance sheet and also the this question number 5. Okay, in question number 5, issued share is 75,000.
Okay.
Issued share is 75,000. Application money is 30 rupees. So application money received is 27 lakh it is given. 27
Okay.
lakh and per share application money is 30 rupees. It's 30 rupees. So number of application you can calculate by this. Number of application will be 27 lakh divided by 30 rupees. So it is 90,000. Now we have three options. One, the first is reject the application, reject the excess
Application.
application money. The second option we have is pro rata allotment. Pro rata allotment.
Allotment.
It means that we have to issue share in proportion. Like total application is 75,000 and we have received 90,000 share. So it will be 5 is to 6. So for every 6 application, we will issue only 5 share and the balance 1 share money will be used in allotment. Okay. There is a topic called oversubscription of share in which we have to discuss this. But the question is here, that's why I'm explaining. So pro rata allotment means you issue share in proportionate. You have received for 90,000 application
Yes.
and you have only 75,000 shares. So you cannot give this excess 15,000 shares. So what will we do? We will utilize this 50,000 excess application for allotment money. Think about it. 75,000 shares into 30 rupees. We will utilize 2,25,000 on application. We have received 270 and we will utilize 225 on application. The balance 45,000 will be used in allotment. It will be treated as advance money. Okay.
Okay, sir.
So this is pro rata allotment. And third is combination of these two. Combination of refund and pro rata means some of the application will be rejected and money will be refunded and balance application will be pro rata allotment. Okay, we will do pro rata allotment for balance application. So these are the three options we have. Okay.
Okay.
So this is the solution of question number 5. If you want to copy this, then
Just have copies, sir. So what is the first one?
Reject the access application and refund.
So like what the mean like
Mean the excess application, that is 15,000, we will refund the money for it. So 15,000 into 30 rupees, 45,000 will be refunded. Okay, we can only accept application up to 75,000. So we have three options. The first one is reject the access application, that is 15,000. You have received 19,000, 90,000 application and you have only 75,000 shares. So you can reject the 15,000 application and refund the money for it. The second option is you can issue only 75,000 and the application money received for access application, that is 15,000 into 30, 45,000, will be utilized in future calls. Okay, and the third is combination of these two, means some of the application you will reject and refund the money, and the balance application we will do pro rata for it.
okay sir.
Done.
Yes.
Okay. Now, there is a new concept called calls in advance. We have discussed security premium, then calls in area in our previous class. Now, the concept is calls in advance.
Okay.
Calls in advance. Okay. So calls in advance. Now, what is calls in advance? So when a shareholder pay the amount of future call along with current installment or call, it is called calls in advance. It is called calls in advance. Okay.
Advance.
Now, for journal entry purpose, actually calls in advance is a current liability. So if it is to be shown in balance sheet, it will be treated as current liabilities, other current liabilities. So journal entry first, when call mm, for money received along with calls in advance. Along with calls in advance. So whatever the call name is, let's say that you have received the first and final call money on allotment. So the entry will be bank account debit when you receive, because the amount will be higher than the current call. So bank account debit to share uh, allotment or first call and two calls in advance. Now, if you receive calls in advance on allotment, then it is related to first call and final call. If you receive calls in advance on first call, then it is related to final call. So always the next call we have received with this one. So the second entry, when we have to adjust. So for the second, for adjustment of calls in advance. Again, the entry will be bank account debit because you are receiving the other call. But now in this case, calls in advance will be on the debit side. When it is received, it is a liability. And when you utilize it, then liability is finished. So that's why it is debited. So bank account debit, calls in advance account debit to either first call or final. Okay, these two entries are related to calls in advance. Please write this.
Okay, so just a sec. Scroll up, sir. Okay, sir.
Okay, now the presentation in balance sheet. So presentation in balance sheet, we have to divide it into two parts. One is balance sheet and the second is notes to account. Because if you have to write in balance sheet, then you have to prepare notes to account also. So as on this particular, then note number, and here it is amount. The first side in balance sheet, as we have discussed, is called equity and liabilities. In this, the first one is shareholders fund. And under shareholders fund, the first item is share capital and the second item is reserve and surplus. So we don't have to show the full balance sheet here. We have to show up to this point only, up to reserve and surplus. Okay, so share capital and reserve and surplus. So note number one, note number two, and then we will prepare notes to account. So for notes to account, it will be okay. So it is notes to accounts is serial number, then particular amount, and the second. There is two amount column in notes to account. Note number one is share capital. So we will write the heading first, share capital. And under this, if you remember the classification of share capital, the first one was authorized, which we have discussed in one class, that how to show the share capital in balance sheet. So in authorized, oh, I think we have done this. Yes, this was, we have done the balance sheet part. Then why didn't you solve the question, Vivek?
Yes, sir.
The presentation in balance sheet we have already done in one of the previous class. So why you didn't solve the question? Hmm.
Yeah. Where
It is clearly written here. Then what is the issue? What is the problem in solving the question? The question number 4. Authorized capital of Suhani Limited is 45 lakh divided into 30,000 shares of 150 each. So first we will write authorized 30,000 equity share of rupees 150 each. So it is 45 lakh.
Okay.
After that, it is out of these company issued 15,000 shares of 150 each at a premium of 10 per share. So premium we are not talking about right now. We are talking about only the issue price. So we have issued only 15,000 shares. So issued capital will be 15,000 equity share of rupees 150 each. It will be 22 lakh 50,000. After this, it is said that the amount was payable as follows: 50 per share on application, 40 per share on allotment, 30 per share on first call, and balance on final call. Public applied for 14,000 shares. So subscribed share is 14,000. All the money was duly received. So now the subscribed. I told you that under subscribed capital there is two types. One is subscribed and fully paid up, and the other is subscribed but not fully paid up. The condition for categorizing any call, any share into these two category is that company has asked full amount on all the shares and it is also received. Then only it can be written under subscribed and fully paid up. So in this case, company has asked all the money and it is duly received also. So that's why subscribed and fully paid up. Public has applied for 14,000 shares only. So 14,000 shares of rupees 150 each, fully paid up. So it will be 21 lakh. That's it. This 21 lakh will go in this share capital. And reserve and surplus, there is 10 rupees premium on 14,000 shares. So we have to write note number 2, we have to prepare reserve and surplus. In reserve and surplus, it will be security premium, securities premium reserve. How it will be calculated? 14,000 share, oh sorry, rupees 10 per share on 14,000 equity shares. So it is 1 lakh 40,000. So here it is 1 lakh 40,000. This is it. This is your solution of question number 4.
This one.
Question number 4. The date of balance sheet is given here. No, not given. So this is your solution of question number 4. We have completed the calls in area and calls in advance. So I will share the question for that also.
So send like three, 4 question because my practical is going on. So I'm busy in that thing.
I will share only 2 questions.
Okay, sir.
Done?
Just a sir. Done, sir. Scroll up, sir. Done, sir.
Okay. So now we have completed this previous class homework, and okay. Now, after this, there is a concept called over subscription of share and under subscription. First of all, we have to understand the meaning of these two words. Then you can easily understand how it is accounted for. So first thing is under subscription. Under subscription of shares. Now, when a company receives application for shares which is less than the issued shares, then it is called under subscription. Under subscription of shares. Now, if we talk about accountancy, how to do the accounting for this under subscription, then you can see in the same question that I have done here, it is under subscription case. There is no change in accountancy. You have to take the number of subscription received, application received for solving the question. Okay, so in this question, we have authorized capital of 30,000, equity share of 150 each. You can see here. And after that, we have issued share of 15,000, equity share of rupees 150 each. But we have received application from public for 14,000 shares only. So we will do all the calculation based on this 14,000 shares, not on this 30,000 or 15,000 shares. So this is the simple case of under subscription. Okay, when you receive application less than the issued share, then it is called under subscription. The question is that how much less application is allowed. So, as per the guidelines, rules of Companies Act or SEBI, the application should not be less than 90% of issued share. So, if you are issuing 15,000 shares, So it should not be less than 13,500 shares. If it is less than that, then you can give a note for this. If question is not saying anything, then you can give a note that it is a case of minimum subscription. Minimum subscription is not fulfilled, so company should refund all the money received on application, and this application is not successful. Okay, so minimum subscription, if you remember the concept, we need to at least 90% of issued share. Application received should be at least 90%. So in that case only you can issue your share. Otherwise, you have to refund all the money, all the application received, you have to refund. Okay, so this is under subscription. Now, what is over subscription? So over subscription means over subscription of shares. So when a company receives application more than the issued share, then it is called oversubscription of shares. It is called oversubscription of shares. Company cannot give shares more than the issued shares therefore there is three option a company can exercise have. So the first is reject the access application and refund the money. And the second is proportionate allotment, that is called pro rata allotment, and then the mixed. Okay, or you can say combination of two. So this is the oversubscription and undersubscription. Please write this. We will discuss the oversubscription accounting in detail in our next class. So until then, you have to solve these questions.
Okay.
Done.
Wait, sir. Scroll up, sir.